Hi, good morning, lunchtime, afternoon to everybody that's joined us for the Co-op Credit Union's virtual AGM. My name's Jackie Littlewood and I work for ABCL and just supporting with the technology this afternoon. So welcome everybody. We've got 30 members on so far this lunchtime. So everybody that's joined us is in listen only mode and you have the option to ask questions at any point throughout the AGM. So if you're using a PC or a laptop, the question tab is in the control panel at the top right hand corner of your screen. If you click on the little triangle, it brings out a pop-out box that you can type your questions in. Type any questions at any time throughout the AGM and we'll pick them up and direct them to the board. So if you're using a PC or a laptop, it's indicated in your control panel in the question tab and click on the little triangle. If you're using a mobile device, using an iPhone, there's a question mark on the bottom of your device. Again, if you click onto that question mark, it'll bring out a little box that you can type your questions in. And similar, if you're using an Android device, it's indicated with a question mark at the top of your device. Throughout the AGM, the board will be presenting from slides and some documents, and they're available for you to download to your own devices in the handout section. And there will be some electronic polling this afternoon, so I'll just launch a test poll so that everybody could get used to the technology. So how is the weather in your area today? So anybody that's just joining us, this is just a test poll to get used to the polling system that we'll be using today's AGM. Got 32 members just joining. People are just joining as we're speaking. So this is just a test poll. And it looks like it's quite varied up and down the country. We've got majority of voters that have joined us that have voted. The results from these polls will show instantly as soon as the poll is closed. So about 8% of members that have voted. I'll just share the results with you. This is how the voting system works throughout the AGM. So to ask questions, just to repeat, the handouts are in the handout section, which you can download to your own devices. Using an Android device, there's a question mark at the top of your device that will bring out a pop-up box to type in any questions. Using an iPhone, it's indicated with a question mark at the bottom of your device. And if you're using a PC or a laptop, in the control panel at the top right-hand corner of your screen, there'll be a question tab, and then it pops out into a box that you can type your questions. Thank you for listening. I'll just hand over to David to formally open the AGM.
Okay, hello, thank you, Jackie. I'm David Fowle, I'm the chair of the credit union. Thank you all for joining. This is our 4th online AGM, and thanks to Jackie and ABCL for hosting the event here. We have no apologies, so we have all of my board is with me today, and all of the staff team are here as well. So the first item on our agenda is to the approval of the minutes of the meeting held on the 25th of January last year. So they were provided on the information that went out about the meeting. So hopefully people have had a chance to look at them, and if you could all vote, I'd be grateful. Thank you.
We've got 40 members that have joined us so far. This is the first poll to approve the minutes of the meeting held last year. We've got 88% members that have voted, and it's a majority yes. 14 have abstained as they didn't attend.
Okay. Thank you very much. Thank you. Move on to my report for the year. Last year, sort of pretty much the same as every year since the start of the pandemic in 2020, has been a challenging one for us and our members. We've seen high inflation, although it's beginning to fall back, and wages have been falling behind that inflation rate for quite a long time now, putting a lot of pressure on pretty much everyone in the UK. And this has been another year where the story is basically real living standards deteriorating for people month by month. Unfortunately, therefore, as a result of this, we've seen disappointing growth for the second consecutive year, with loan balances and saving balances pretty much loans have been just growing, whilst our savings balances have shrunk a little as members have dug into their savings. But throughout the year, we continue to be active in seeking ways to support members beyond just agreeing loans for them. We refer people to our free online benefits calculator, and we are also we can advise people in moving to reputable advice organisations rather than some of the less reputable people that are out there offering advice. And we've also introduced a hardship fund where we make occasional discretionary payments to members when their situation is just too desperate, and actually granting a loan is not going to help make things any better. So as we begin to emerge from what we hope is the worst of the inflationary pressure, we're in a fortunate position that we have taken some difficult decisions to on our risk appetite early in the crisis, and that's left us in a pretty robust financial position as we move into this new financial year to start growing again, hopefully that with real incomes improving for us all. The year's been one of investment and innovation. We launched a trial of the Credit Saver revolving credit facility. Pretty much works up a little bit like a credit card, but without the card, with some funding from our partners at Fair for All Finance. And we've working on a long-term project to integrate a new app and front-end digital experience for members, and that's got quite a few members on that already. Pretty much making how the credit union, albeit a very small financial institution, experience is pretty much the same, and it's easy to use as you get from one of the major banking groups. And we've also secured some new permissions from the FCA, our regulators, in around our lending permissions, which will allow us to sort of introduce some new lending products in the near future, we hope, and you'll hear more of that later in this year. So we're looking forward to the rest of 2024 and beyond with a sense of hope and optimism as the world around us begins to feel a little more optimistic, and our internal innovation and investment strategy begins to provide opportunities for us to thrive. Can we move on to the next slide, please, Jackie? It's our silver anniversary. We were founded on the 1st of October 1998. This makes this our 25th anniversary year. Some figures there which shows the contribution of the credit union over those 25 years. More than 75 million has been deposited with us in savings accounts over that time. We've loaned more than 50 million to members in loans, and our membership base over that period, we provide services to over 28,000 cooperative colleagues and members around the country. So we're hoping, when you see some of the figures for the year for last year, that what's taken us 25 years to do, that in our current rate of growth and our current levels of activity, we should be able to match those figures within the next 10 years. And on to the next one, Jackie, please. So it's a round of thank yous. Thank you to all our staff. Some photograph of them outside Angel Square, I think, on the right-hand side of the page. Our volunteer directors, that is your board of directors on the left of the slide, and our partners. We have partners who we work with providing our IT and all sorts of other services, and of course we've got the various cooperative organisations we work with, the range of societies we work with around the country. Importantly, Co-op Group, the biggest of those partners, who also host our office in Manchester. We're grateful for all of them, and a special thank you to the staff team there for their dedication and hard work over the last 12 months in providing members with the services that they need and deserve. Okay, so thank you. I'll be back a little later, and I'll now pass on to I think our treasurer. I think he's next on.
Thank you, David. My name's Grant Mitchell. I'm the treasurer of the credit union. So my job today is to report on the financial results for the 2022 to 23 financial year. The results can be found in the published accounts, which are on the credit union website, but I will briefly summarise today. The difficult economic climate that David's already spoken about has obviously had an impact on our members and on the credit union. Our share balances reduced by 12% in the year as members needed to draw on their savings. On the one hand, I see that as a positive thing, that the savings balances members had built up were available when they needed them, but it does reduce the money available to the credit union to lend. Loan growth has been fairly flat, with the number of new loans down and limited growth in loan balances. And we've continued to have to decline a high proportion of loan applications where the member would have been unable to afford the repayments. More positively, the tough decisions we've taken on our risk appetite to lending have kept our bad debt position under control and contributed to a strong surplus for the year of £102,000, also boosted by a £40,000 grant from the Fair for All Finance Fund to support our pilot revolving credit initiative. We've continued to invest in staff and technology to support our future growth as and when economic conditions improve. Our capital position has strengthened considerably in the year as a result both of the surplus in the year and the falling share balances. So the capital ratio has moved from 8.9% to 11.4%. That's significantly above the regulatory requirements and gives us considerable scope for future growth. I'll hand over briefly to Mark Heaton from our auditor, KM Accountants, in case he wishes to make any remarks, and then I'll open up to any questions on the accounts, either for me or for Mark, before we formally put those accounts to the vote. Mark, anything you'd like to add?
Yeah, just thanks very much, Grant. Good afternoon, everyone. The audit report is in the accounts that have been circulated, and as auditors, we have no concerns that we wish to bring to the attention of the members of the credit union.
Thank you, Mark. Jackie, do we have any questions coming through, or would you like to remind people how to submit a question if they want to?
Yeah, there's no questions, just a congratulations about the 25th wedding anniversary, 25th birthday celebrations, but there's no questions regarding any of the accounts. If you do want to ask any questions, please type them into the question tab on your individual devices.
Right. So I'll just waffle for a moment to give anybody a chance to ask any questions if they want to. In a moment when we've answered any questions or else concluded that there are none at this stage, we will.
Just a comment come in. Although loans are flat, surplus is up. So well done.
Thank you. Yeah. It's been a tough year. We've had to take some tough decisions on lending, but that's come through in strong financial results. In terms of keeping bad debt flat when it would have been very easy for that to rise in the economic environment.
Yeah, just a question come in. Has there been any member growth?
Has there been a member growth? I think perhaps I will defer on that and let Matt comment on that when he comes to his chief executive report. I think it's been relatively flat, but Matt will have the precise figures to hand.
Thank you.
Okay, in that case, there are two votes coming up. The first, well, three actually, but the first is to approve the accounts. So ask you to vote on that one.
So we've got 43 members on at the moment. 84% of those, 87%, 89% of those have voted, and it's a majority yes.
Thank you very much. And then the second vote, I'm very happy to propose that we reappoint KM Accountants as our auditors for the forthcoming financial year, the 23-24 financial year. So I would ask you to approve that reappointment of KM. They've been our auditors since 2020, so this will be their fifth year as auditor.
So again, 89% of members have voted, and it is a majority yes.
Excellent, thank you very much. So the final part of my report is to propose on behalf of the board the dividend for the year. So given that strong surplus, we're pleased to be able to propose a dividend of 2% on savings balances, a considerable increase on the rates we've paid over the last few years. I think last year was 0.4%. That reflects the rise in interest rates available on sort of instant access savings accounts, that type of thing in the market. So we think our dividend remains in line with the rates available on those sorts of accounts. Our strong capital position means we are able to recommend paying out the whole of our surplus for the last financial year and recognise the important contribution that our savers make to the overall health of the credit union. We are also today launching our new Silver Saver reward account to encourage the habit of regular saving, and there'll be more on that from Matt later. So just to repeat, we're proposing a 2% dividend on savings balances for the year, and there's a vote upcoming on that proposal.
This one's a quick one, always is. We've got 92% of members voted, and it's an overall yes.
Thank you very much. So that concludes my whistle-stop tour of the financial aspect, and I will hand over to Matt, I think, for the Chief Executive's report.
Thank you, Grant, and thank you, David and Jackie as well. And hello, everyone. I'm Matt Bland. I'm the Chief Executive of the Credit Union. It's great to have so many members joining us today for the AGM. We really appreciate your support and your attendance today. So we've mentioned this a couple of times already in terms of the overall picture for the credit union this financial year, but it's been a tough year, and it wouldn't have escaped anyone's notice, I think. In terms of the cost of your basket shopping in the supermarket, or the energy bills that we all pay, or rising interest rates on mortgages and so on and so forth. But all of that has combined to have a real detrimental impact on people of all walks of life, unfortunately, over the course of the last year or two. And for us, that's meant that growth has been hard to achieve. And lots of our members are finding things really tough. Many of whom are relatively low-paid retail workers in co-op supermarkets, of course, and so that has been a challenging context for us, and a challenging for the team and I, in terms of having to give people the news that we'd rather not give in terms of loan applications and so on more often than we'd like. But we are, as David has mentioned already, continuing to seek alternative ways to support members where a loan is not the solution, and that includes the benefit calculator, the hardship fund, and a whole range of advice and guidance and support that we provide via the website, via our social media channels, via our partnerships with Co-op and some of the independent co-op societies that we work with, and the Usdaw trade union as well, in terms of providing informal support and guidance around how to get the most out of the money that you do have. So we're really keen to provide those additional forms of support where offering a loan unfortunately can't always be supported, and wouldn't be the right thing for either us or members who maybe would benefit from a cash injection, but wouldn't be able to support an additional commitment ongoing. However, we're feeling positive about the outlook into the future, thanks to, as David mentioned, some challenging decisions around that risk appetite, which we talked about last year as well. Last year we were looking at the financial year 2021-22, and during that year we saw a significant increase in the cost of bad debt, and at that time we recognised that was a trend we couldn't allow to continue, and so we became slightly more cautious in terms of the lending decisions we were making, and it's good that we did that when we did, because it's allowed us to achieve the surplus that we achieved this year. Of course, it's had that less good impact on growth, but from a profit and loss point of view, it's given us a strong return, which enables us to offer the level of dividend that we're offering, that otherwise wouldn't have been possible. And it also puts us in a good position, as Grant has also mentioned, in relation to our capital reserves, so that we have a robust balance sheet which supports us taking a bit more risk as things start to improve in the wider economic outlook, with real incomes starting to grow again, and inflation falling, and anticipation around interest rates following suit, which we hope during the course of this year and into the future will mean that we can start to achieve some of the levels of growth that we were fortunate enough to during the COVID period. And it's not that we haven't been investing and planning ahead for the future during the year either. So there's a number of achievements I've listed there in terms of what we've been doing in the background to prepare for future growth. Some of these have been alluded to already, but I'll quickly run through them. Firstly, we were really pleased that our finance, banking and credit manager, Joel Williams, participated in a leadership development program run by our trade body and its charitable sister organisation, ABCUL and the Credit Union Foundation, program called CU Futures, and Joel, is someone with real potential to go a long way in the credit union sector into the future, and was awarded the kind of star prize along with his partner from the Hull and East Yorkshire Credit Union, which we were really pleased about, and is a testament to his commitment, his loyalty to the role and to the credit union world. And he was fortunate enough to get a trip to the US as his prize for that. So that was a real achievement. We're really delighted to celebrate that success with him last March when he was awarded that. You should have noticed, hopefully, that over the last few months now, we've been inviting members to begin to engage with our new integrated mobile app service, which is provided by a new partner to us, Viva IT. And this is the coming to fruition of a long process of investment and work in the background to build a new link between our kind of back office system that we use to manage all of our member accounts and this new platform Launchpad, and it will enable us to become much more efficient and effective in how we manage and support members. We have had some feedback through focus groups and other consultation with members. We run regular surveys and things like this, and some of you may have responded to over the years. That the current arrangements we have, which rely on a number of different systems which are not necessarily so easily kind of understood by members, have different brands and things. The Nevo messaging app is a good example, for instance, which it offers a really good slick experience to members, but the fact that it's kind of off to the side from the rest of how we deliver our services, we recognise is not an optimal experience. And so this process of introducing the new app addresses some of those shortcomings and will allow us to enhance the capacity of the team to process more business without necessarily having to expand the team, because a lot of the manual work that the members wouldn't see that goes on behind the scenes to deliver the service day to day, we'll be able to automate and streamline with the Launchpad solution. So we're really excited to have taken that step. We've got around about 1,000 members now using the new app, and the process from here will involve us gradually adding to the functionality that's available through that app, and then starting to migrate our existing digital users with the Members Access website and the Nevo solution onto the Launchpad app, the branded Co-op Credit Union app that some of you may have used already. So I'm hopeful by this time next year that we'll have a much more kind of integrated, coherent experience for members, which is simpler to understand, but also delivers more efficiently and effectively for members, and opens up possibilities for us in terms of adding really value-added services to the stuff that we already provide, in addition to the savings and loans services that are obviously our core business. So that's a really exciting development, and there's a lot more to come there. As David mentioned briefly, we also secured a permission from the FCA for consumer credit lending, which was a long time coming due to the backlog at the FCA. It took us a long time just waiting for them to come to our application in the queue. But what that enables is for us to start to do more innovative lending in partnership with third parties, providers of services, and we're just starting to pilot a new loan scheme with Mid Counties Cooperative, who run a chain of daycare nurseries under the brand Little Pioneers around the country, to help spread the cost of childcare, which for those of you with young families, it won't come as a surprise that the cost of nursery care can be really eye-watering and very challenging to to meet. And so the idea behind this scheme is that through providing some loan finance, we can help families to manage that cost, spread the cost, and be better off in the long run as a result, through, for instance, being able to work more rather than taking career breaks, which many parents are forced to do through the sheer cost of childcare as it stands. So we're excited about that, and that's something that has been enabled by this permission that we were successful in obtaining during the year. We've got other plans to build on that in similar ways, working with partners providing services and goods in a sort of three-way financing relationship, and that's what the permission provides. It also provides us with a launch pad to move into other types of lending secured against assets like cars, for instance, which is something that our trade body ABCL and others in the sector were able to secure the ability for credit unions to do through legislative reform that took place in 2023. And so there are opportunities for us to really grow into new markets through this permission we've obtained. So we were pleased about that. And we've continued to really invest in the relationships that we have with our partners. I mentioned earlier that we provide money advice and guidance through our own channels, through our website and through social media and so on, but we're also really active now, particularly through the efforts of our marketing and business development manager, Mel Phillips, in providing meaningful, practical help and money tips to the employees of our partners via their channels, and also through USDOR, the trade union for shop workers and related workers. So that's been a real key focus, and we're hoping that through building relationships which perhaps have not been as strong as they might have been in the past, with partners such as Southern Co-op or Central Co-op, who has been a key focus for us for some time. We've always wanted to have a better relationship with Central, and it's been a long process of building those relationships, but we're now starting to make meaningful progress in getting our services in front of colleagues within those societies. So we're hopeful that that's going to be a positive development in terms of improving our growth trajectory into the future. As a regulated financial service and a cooperative, governance is a real critical part of what we do to ensure that we're really in control of the risks that we're taking, and that we're compliant with the regulatory requirements that we're obliged to follow. And so that's been an ongoing process for a number of years, but we've continued to invest in that, and in particular it's the second year that we've been running the internal audit process with our partners Alexander Sloan, who provide internal audit reviews to us on a thrice yearly basis, and give us really excellent feedback and sort of advice around how we can further enhance and improve our governance framework and our compliance. And so that's been a really positive experience, particularly the case in light of the consumer duty requirements that the Financial Conduct Authority, the FCA, introduced during 2023. We engaged in a significant project around ensuring that we met the deadlines around the introduction of consumer duty, and reviewed all of our products and services, the information we provide to members around key terms and conditions and loan agreements and so on, to ensure that they're as clear and as effective as possible in terms of member understanding, and ensuring that we're always taking the members' interests as our top priority, whenever we do anything new and in relation to our kind of core business. So we're really pleased with the progress we've been making there, and as I say, the internal audit structure that we set up with the permission of members following a vote at I think it was the AGM 2 years ago in 2022, when we voted on moving from the old supervisory committee structure to this internal audit process. That's been a real positive for us. Perhaps not something that is so visible to members or the sexiest subject, but it's really important to ensure that we're meeting your needs and we're secure and sound as an organisation. And then finally, the Credit Saver revolving credit product that David mentioned earlier as well. We were really pleased to receive in total a £50,000 grant from Fair for All Finance, £40,000 of which was paid to us during the financial year under review, to trial this product. And the idea behind Credit Saver is, as David mentioned, it's akin in many ways to a credit card or an overdraft, but we were trying to be innovative in terms of how the repayment structures work, so that rather than with the minimum payment model of the typical traditional credit card that you'll be familiar with, where provided you make that minimum payment, your account is considered to be up to date by the lender. But quite often what that means is that those who are only able to make minimum payments on a credit card are trapped in debt, and the minimum payment, to all intents and purposes, only really covers the interest owing on the balance that you've borrowed. So your credit cards are a really bad way to borrow long term, but we find that many of our members and potential members and applicants for credit, unfortunately, do carry credit card balances for a long time and pay lots of interest that is leaving them out of pocket and in a difficult position financially, which we think is an injustice in terms of how that market works, which is the biggest, by some distance, the biggest consumer credit product in the marketplace. And so what Credit Saver does is, rather than requiring just a minimum payment, which just covers interest, requires borrowers to make a meaningful payment towards their account, which would see the equivalent personal loan of a similar value to their credit limit repaid over a reasonable period of time. And so that ensures that they won't get trapped in this debt trap that we see far too many people caught in our audience, in our kind of target market. And so it was that innovation that Fair for All Finance wanted to support, and it's been an interesting learning experience to date. And that pilot continues for a couple of years yet, and we continue to work closely with Fair for All Finance. It's worth saying, for those that may not know, Fair for All Finance is a government organisation, a quasi-government organisation, funded from the funds that sit in dormant Bank and Building Society accounts, and they have about £100 million available to invest in organisations like credit unions and other social lenders, and they've been very supportive of us. They gave us a small grant during the COVID crisis to support some of the costs that we incurred in moving to a home working model. They've supported this Credit Saver pilot I've mentioned already, and they've just launched a new cost of living kind of resilience fund for community finance and lenders like ourselves, which again presents opportunities for us to attract investment to enable us to achieve our goals more quickly. So that's a really positive relationship, and a really we're really grateful to Fair for All Finance for the support that they've provided to us as a credit union with Credit Saver, and hopefully into the future with some of the other things that we want to achieve in terms of, for instance, the digital experience through the app that I mentioned earlier. The last thing I wanted to say on this slide was just how brilliant the team is that works for us at the credit union. That there was a picture of them earlier on our summer social day when we got together, and we have a couple of meetings each year where we sort of talk about what the agenda is for the credit union strategy going forward, but also to have a bit of fun together and build those relationships and so on. But we're really pleased, and it's great that we have such a committed team who, well, we haven't lost a team member for a couple of years now. That people seem to stick around, and I think that's a really good indicator of the rewarding nature of the work that we do in terms of supporting people. Getting really good feedback from members, and that's all down to the fantastic work that they all do day to day. As I said, we're investing in trying to make their lives a bit easier in terms of how we deliver our services through that digital solution that I mentioned, Launchpad. But right now, there's a lot of hard work goes into delivering that service in a way that to the member appears very seamless and responsive. And so, I really want to recognise and thank the team for all of their hard work during the year and their continued commitment to the credit union. So I mentioned there that the feedback we get from members, and we're really pleased that when we ran our annual summer survey of members, where we asked this Net Promoter Score question on an annual basis, which is basically asking members how likely it is that they would recommend us to a friend or family member, that our Net Promoter Score increased from an already very high 61, positive 61, to an even higher positive 75. Which is, the maximum you could possibly get for your Net Promoter Score is positive 100, and it goes down to minus 100. And many financial services brands and banks and so on have negative Net Promoter Scores due to their services not leaving something to be desired. But that's not the case for us, and we're really delighted to have to have got such a good rating there, and for that to be going in a positive direction. And as I say, that's in large part down to the hard work and dedication of the team that deliver the service every day. So again, a good big thanks to them, but also really pleasing result for us to indicate that we're doing the right kinds of things for our members. I wanted to touch briefly on the impact that we've had during the year. Jackie mentioned it in the handout section on the control panel. You can access the annual report for the year. It's also available on the web page where you went to register for today's meeting. And this set of graphics is taken from that report, so you can have a look in your own time if you're interested in doing so. It also covers a number of the things that we're discussing today in terms of financial results and other things that we're up to. But we're really proud of the impact we're having. In particular, I'd emphasise that that stat there, £1.3 million in interest saved for our borrowers over the last 4 years. That's what we estimate that those members might have paid had they gone to a typical money lender in the market that we see members regularly borrowing from. As we assess their loans and so on a daily basis. So that's a real significant contribution to those individual households' financial position. By saving them that interest, they're able to save that money, or use it for some of those finer things in life that are really important for all of us in terms of making all the hard work worth it. And far too many people get ripped off when they borrow, and unfortunately have very little option but to borrow in many cases when things go wrong and unexpected expense arises. And so we're really proud of that. It's also worth noting there that the benefit calculator, we had about 320 members during the year go through the process, and of those that did so, they identified £632 per month of benefit income that they were eligible for, much of which they're not claiming. And so we think that's a really important contribution to their financial well-being in terms of unlocking income that they're entitled to but not claiming, and therefore enabling them to alleviate some of the pressure they may be facing in their day-to-day budget. And it's something that we're keen to continue to invest in. I mentioned the digital solution we've begun to roll out already. One of the things that we're hoping that will enable us to do is to bring that benefit calculator, which is currently on the website as a standalone service that people have to kind of make an effort to go and find, though we encourage them to do so, to bring that into the core experience within the app. So when you're checking your balances, or maybe applying for a loan or requesting a withdrawal, whatever it might be, you could also click on the calculator and quickly assess whether maybe there's income that you're missing out on. So trying to make that as convenient, as streamlined, and as kind of coherent as an experience as possible. And that's what that investment, it's a practical example of what that investment might enable us to do as we move forward. And then the chart on the right hand side, in the bottom right hand corner there, is the indices multiple deprivation deciles, and it just emphasises, I think, what we're really keen to do, which is to support those households that are least well served by the market in general. And you can see that kind of straight line proportion there between 10 being the least deprived communities and 1 being the most deprived. We're about twice as represented in those most deprived communities as they are in terms of the numerousness across the country, if you like. So we're leaning into that. We want to support households who are in the most challenging circumstances, who need, as the average and median loan values show there, they need modest sums of money to support their everyday expenses. The costs of a family Christmas, or to meet an unexpected bill like the car breaking down or something like that. Things that people really get ripped off for in the wider market, and we're really proud of that legacy and that impact that we're having on a day-to-day basis. So I mentioned the annual report already, but this another graphic taken from that, and these are just some examples of the of what we've been up to during the year. You can see I mentioned Joel getting his graduation from the CE Futures program there on screen with his partner Maya there. David and Chris, David Dickman and Chris Smith in the centre there, receiving the Graham Southall Award last year. You may recall, if you were listening in last year, that they stood down after long service to the credit union a year ago, and we had a little celebration after the AGM last year to recognise their huge contribution to our success, and that's them there receiving the award together. I mentioned Central Co-op earlier. We attended their annual meeting of members in the spring of last year, and there's a picture there at the bottom of us at that event, and various other events that we've attended. Mel appears a lot in these pictures where she's at various exhibitions, engaging with partners, employees. There's one there of Andy and Mel in a rather fetching high-vis jacket. That's at one of the co-op distribution centres over in Merseyside that we attended to engage with, and colleagues. And there's a number of different things there in terms of Usdoor as well. So it just brings it to life a bit for you in terms of some of the stuff we've been up to during the year to engage with colleagues, members, potential members, and really get the word out about what we're doing, as well as investing in our team and so on. Oh, yeah, no, I did want to go on to that. So, Grant it was that mentioned it, I think, earlier on, and David mentioned the anniversary, and Grant mentioned that we're announcing this new product, so I'm sort of tying those two loose ends together here. So it's our 25th anniversary year this year, and in order to mark that, we wanted to launch a new savings product, which, given it's the 25th, we're calling the Silver Saver, and we're really excited about this this product, which we hope will support our members to get into a regular savings habit. And that's what we're all about as a credit union. We want to support people to get into good habits with money, and regular savings are the most effective way to build financial resilience. And so from the 1st of February next week, we'll be making this product available to members to open accounts. It pays 5% annualized interest. And we're just going to offer the product for the remainder of the current financial year, so from the 1st of February to the 30th of September, and at the end of that period you'll receive that 5% interest on balances that you've held in the account during that time, and we hope to be able to offer an equivalent regular savings product for the new full financial year at the point that that maturity date comes up as the year ends. The interest is dependent on no one withdrawing from the product. So if you withdraw from the product during the year, your account will convert into a standard member share account, and so you'll receive the membership dividend rather than the 5% interest. So it is dependent on you keeping that money in the account until the end of September. But provided you do that, you'll receive that 5% interest, and it's unlike the dividend that we announced earlier, the 2% dividend for the last financial year ending September 23. This is guaranteed up front, so we're contractually committing to you that we will make that payment irrespective of anything else, whereas of course the dividend is a retrospective thing that we apply after the fact based on the performance for the year. So we're excited and pleased to be launching this new product, which is a new departure for us. We recognise that with the environment that we're operating in and interest rates rising and so on, that we need to ensure that what we're offering is competitive and supports members in the right way. And so there'll be information coming out about this following on from the AGM in terms of the detailed terms and conditions and details about how to open one of these accounts should you wish to. And we're very happy to take questions about it today as well, if anyone's got any. So finally, I just wanted to touch on the commitments that we made under our purpose projects a few years ago now, and where we reckon we are with some of that. So this sort of summarises the commitments we made back then. I think it was in early 22, wasn't it, when we published this initially. So there was a picture on screen briefly earlier on of the Inclusion Innovation Member Forum, and so this is a meeting that we're having now annually with groups of members who are interested in giving us feedback on some of the things that we do and some of the things we're thinking of doing into the future. And it's been a really fruitful forum for us in terms of getting direct feedback around how our services could be improved and whether the ideas we've got for new products and services are good ones or not, as well as helping us to think about how we can be more inclusive as an organisation and promote diversity and ensure that our services are meeting the needs of as broad a range of people as possible, both in terms of how they work and also how they're presented and so on. So that's a process that's ongoing. It's met twice now for the 2 years that since we made this commitment, and that's something we're going to continue to do going into the future. In terms of monitoring and analysing the diversity of membership, that's something that we're anxious to do more on, but it's something we're hoping that the new digital solution, that Launchpad solution I mentioned earlier, will enable us to do more effectively. Because we want to ensure that anything we do do in this space in terms of capturing some of the characteristics and demographics of our membership is done in a safe way, and is done in a way that doesn't create any risk in terms of data protection or in terms of the potential for discrimination. So it's about saying capturing that information in an anonymous way, essentially, is what we want to do, and we're hopeful that the Launchpad solution will enable us to do that consistently across the membership rather than through surveys, which is what we've done to date. And whilst those are helpful, we're very aware that we only capture the information for those that take the time to complete the survey, and response rates are relatively low. So that's something we'll continue to pursue, and we're hopeful that this development with the digital solution will enable us to do more in that space as time goes on. The Fair for All Finance Affordable Credit Code of Conduct, that's I think it should be Code of Practice, actually. I need to change that slide, but that's a kind of industry code that Fair for All Finance have developed, and according to our self-assessment and the ongoing support that they provide to us, which relies on our compliance with the code, we're confident that we're meeting all of the expectations within that, which are really about providing additional support to people to the extent that we're possible, beyond the loans and savings products we offer, treating those members who are in vulnerable or difficult circumstances, maybe have difficulty repaying loans, for example, treating them with care and supportive, solution-focused engagement, and so on. And our credit control team, and Joan Pollitt in particular is on the call, to do a fantastic job of that. So we're confident that we're complying with that well, and we'll continue to do so as we go forward. I mentioned the tools and technology already that we offer to support financial education, and this we've got more plans in train around that as we move forward too. And we've got these commitments around our loans and savings being focused on those with limited means, and we're continuing to meet both of those targets of half of our loans by number of £1,000 or less. More than 2/3 of our members, in fact it's closer to 3/4 of our members, have either £500 or less in their savings account. And that's important to us because we want to ensure that we, in the pursuit of growth, we don't abandon those people who most need our services, and so that's why we've got those targets there. And we want to do more in terms of supporting vulnerable members. This is something that I'm anxious that we do more with as time goes on. But right now we're focused on ensuring that the support we provide to people who get into difficulty is responsive and effective, and as I mentioned, in particular the credit control team who support members who are struggling do a fantastic job on that. Yeah, I think that's all I would say on that one. Maybe one in terms of the campaigns, we've been campaigning quite a lot this year in relation to something that we're keen to see rolled out more widely in the market in general, something called auto save, which is akin to auto enrolment in pensions, but it's auto enrolment in a savings solution through payroll. And there are a number of trials, some involving credit unions, one at Co-op involving another provider that Co-op works with, and all of the trials, both here and abroad, that have experimented with auto enrolment in rainy day savings and cash savings, show the same kinds of results. It's more effective than anything I've ever seen in terms of building savings for low income workers, and so I'm hoping that this year, with it being an election year as well, might be the year that auto save gets the backing it deserves from government, and if so, is an opportunity for credit unions to engage many more people through workplaces through that auto enrolment mechanism. So as a campaign, that's something we've been focused on during the year. So that's the end of my report. I'm going to move on in a moment to the committee reports, but I thought maybe I'd pause at that point. There's quite a lot of information there. in case there are any questions coming in. Jackie, I don't know if you're able to.
Yeah, there are some questions. It sounds like you've had a fantastic year and a busy year. So one of the questions was, a big thanks for the great AGM. And I think you've mentioned some of these, Matt. What opportunities could the court provide to members with the new consumer credit permissions? And I know you've mentioned quite a few in your summary.
Yeah, in terms of the permissions, so I mentioned that really what the permission is about is where we provide a finance arrangement with a third party that may be selling a service or selling some goods. And what that creates is what's called a borrower lender supplier agreement, and that brings us into a new regulatory regime. And so I mentioned the nursery example. We're also exploring a scheme with a provider of electric vehicles, electric cars, to finance the provision of those cars to people that want to go green with their motor transport. So that's another example. And then I've already mentioned as well the new legislation that came through in 2023, which will enable us to explore at least offering secured loan finance against, for example, car assets. So trying to offer an accessible and affordable solution around car finance for people that again is another space where people with limited means and limited options unfortunately get ripped off. So we think there's definite value that credit unions can add in that space as well.
Thank you. So the next one is, what benefits or opportunities are seen from admitting corporates into membership?
Okay, so that's sort of alluding to the motion we're going to come on to.
Right.
So I might come back to that. Come back to that later. Oh, that reminds me though, there was a question in Grant's report, wasn't it, about membership, which I did scribble down an answer to, and I've just remembered that I didn't come to it there in my report. So maybe if I do that now. So as Grant kind of his instincts were correct in terms of the overall membership numbers are relatively flat. I think we gained a few members overall during the year. But what I would also say is that we do see quite a high level of churn. So whilst the overall number hasn't grown a significant amount, there's been about 15-20% churn within the membership during the year. So we're continually seeing people come and go, primarily as they come and go from employment with the co-op and our other partners. Although it's not necessarily the case that you have to leave us when you leave one of our partner employers, and many members do remain in membership once that after they've left. A significant number of others don't and decide that they'll close their account at that point. But likewise, we're bringing people on all the time. So whilst growth isn't where perhaps we would like it to be in terms of membership, that isn't because we're not engaging new people. And I think what we'd like to do going forward is to ensure that the service is as compelling as possible to retain as many of those people as we can, but also to build new products and services to engage with new audiences. So the nursery example I mentioned already is a good example of that. I think there'll be people out there using the Little Pioneers nurseries that wouldn't have come across us otherwise, and so it's an opportunity to get our name out there.
Yes, it's really good. The next one was several comments and questions. The new app seems really good so far, and I much prefer it than having to log in via internet, and being able to see my savings on the app is really good, and the integrated messaging. That was a good comment. And then there was a question. In terms of working with partners, while it's not in our control how or to what extent they advertise our services to their members and employees, could we work to encourage credit unions to be presented as part of staff inductions, given that many of our partners recognise Usdaw as a union for their staff? Could we work with Usdaw to train reps to highlight the credit union and its benefits?
Yeah, definitely. There's potential in that. I think Usdo, as I said, is a relationship we've really invested in over the course of, well, not just this last year, but over a number of years. This was the first time in some time this last year, April 23, that we attended their annual delegate meeting. We have done that some time in the past, but not for a number of years. And I know that Mel, my colleague that I mentioned, she appeared in a number of the pictures I showed earlier, is running a webinar for Usdo representatives shortly, which is another innovation in terms of engaging Usdo membership. So yeah, potentially that's a good idea, and we'll certainly consider that. I think there have been changes, as I understand it, in terms of how Usdo engages with its members and its potential members as well post-COVID. So we'd have to take some of that into account. But yeah, I think the idea in itself is a good one for sure. We're keen to try and build a network, if we can, of advocates in general. It's something that we've had some success with, but there's more we could do. So that people in our partner employers on the ground and on shop floor or whatever, can promote us to their colleagues. That word of mouth promotion is more effective than a lot of other promotional activity. You trust your friend to give you good advice if they've had a good experience and so on. And we're thinking about things, like whether we could offer a kind of incentive to members to promote us to their friends and colleagues as well. So definitely that's a good idea, and it's in line with some of the things we're thinking about already.
Yeah, thanks, Matt. And there's another comment, love the impact evidence that demonstrates that the credit union's purpose of helping people. Big thanks. And it was something else relating to the membership of the Cooperatives UK. I assume we will be continuing our membership to access their services and to help the support group of the wider movement. And a big thanks to all the staff and everybody who makes the credit union work so well.
Yeah. So the membership of Co-ops UK, absolutely, will continue to be members of Co-ops UK. I mean, it's a really important relationship for us. I mean, just yesterday, actually, as it happened, the Co-ops UK Chief Executive Rose Marley, as a bit of a last-minute addition, came and spoke to our. We had a little event at Angel Square to celebrate our 25th anniversary, and we invited partners and peer credit unions and people from the co-ops we work with to come and celebrate with us and hear a bit about some of the things we've got planned and so on. And so Rose came along and spoke about the importance of credit unions and the wider cooperative economy and so on, which is evidence, I think, of the strength of that relationship. And Claire Dalton, our company secretary, is a secretary of Co-ops UK as well. So we've got those good links, and it's an important network for us. You'll recall last January we voted on the motion to expand our common bond to anyone working in a number of sectors, and one of those was the co-op sector. So we're committed to continuing to support those we work for and are members of co-ops of all kinds, and so of course Co-ops UK is a real important partner for us in engaging with those co-ops up and down the country that we could potentially support.
Fabulous. And then the last one was, would it be worth submitting a motion to the Co-op Party about support for auto-enrolment?
Yeah, so, well, I don't know about a motion, potentially, that might be an option. But I did speak, so another person who came to our event yesterday was Emma Hodinott. Some of you may know Emma. She's the Deputy General Secretary of Co-op Party. And she braved the weather to come over the Pennines. She lives over in South Yorkshire, I think, to be with us for the event. And I had a brief chat with her, and I know that autosave as an idea was part of a number of proposals that were submitted to the Shadow Business Secretary, chap that has been a long-standing supporter of credit unions, Jonathan Reynolds. He's the MP in Stalybridge and Hyde, and if a Labour government is elected in the general election that's expected later this year, then we're hopeful that autosave might be part of the package of policies that might make up their manifesto, because any new government elected this year is going to be in a constrained situation financially. They're not going to have lots of money to spend on new initiatives. But autosave as a concept, it doesn't have a direct cost, certainly not to the taxpayer. There's a bit of cost to employers in implementing it. But the benefits in terms of building resilience for low-income households in particular, as I said earlier, I think are more profound than many other initiatives I've ever seen. And when you consider that there's 40% of the population, some 16 million people that have less than £100 set aside in savings against the unexpected expenses that occur to us all occasionally. That need for a bit of basic financial resilience through some cash savings couldn't be clearer, and so I'm hoping that there may be an opportunity with that election to get autosave rolled out more widely, and for credit unions to be a really central part of how that's delivered.
Thanks, Matt. And another question, have you considered doing more promoting your services to co-op customers in stores?
Yeah, certainly. So I keep referring to, I'm not, these questions seem like they were set up for me to name check people who came to our event yesterday. But another speaker was Rebecca Bergbrecht, the director for membership and community at Co-op, and she's someone we've been speaking to on and off for a while about whether the credit union, since all members of the Co-op are eligible to join us, could be an integrated part of their membership proposition. Now, I know there's been some changes to how that works recently, which have drawn a bit of controversy, which I won't get into. It's not really for us to comment on that, but I think certainly we would say that the credit union could be a real value added part of the membership proposition and the wider community engagement that Co-op does, and it's something we'd like to pursue if we can. So I'm conscious of time, Jackie. We probably ought to move on now to the committee report.
Yeah, that's mostly questions.
Okay, thank you. Thanks everyone for that. Those really constructive questions there, and some really positive feedback as well. It's lovely to hear. So this section of the agenda, we have the committee reports, and we're adopting the approach we've used a number of times recently, in that we're not going to go into these reports in the call necessarily, but they have been made available to you in the meeting papers, and there's also some information in the annual report as well in terms of the activity of the three committees. All three of the committee chairs are on the line. So that's Robin Webster, the chair of the Risk and Compliance Committee, Nisha Ravat, the chair of Nominations and Reward, and Grant Mitchell, who you've heard from already, the treasurer of the credit union, also chair of Audit Committee, which is part of the treasurer's responsibilities. So they're all on the line. They're available to answer questions directly if you have any. And so we'll kind of give some time now for people to submit any questions about those. And while we're doing that, I can maybe just elaborate a little bit on what the three committees do. So the Risk and Compliance Committee oversees, as the name suggests, our framework of risk management, and that involves monitoring key risk areas, a risk register that we maintain on a monthly basis, identifying key risk indicators and monitoring our performance against those, as well as overseeing a process of managing our policies and procedures to ensure compliance with our regulatory obligations. And that committee meets typically 3 times a year. That's probably the biggest agenda of the 3 committees. There's then the nominations reward that's overseeing both the personnel and development and training of the board itself. So recruiting new directors where appropriate, where required, and things like that, and ensuring that we have a nice balance of backgrounds and, as far as possible, diverse life experiences and demographics and so on. Trying to get a good balance of men and women, for example, and ethnicity and so on and so forth, as well as the appropriate skills and experience to deliver the oversight the credit union needs, and also oversees our structure around pay and reward and wider employment policy for staff, as well as the approach to training and development for staff too. And that's Nisha's committee. Nisha's just taken on the chair role for that committee this year, following Chris Smith's stepping down from the board, which I mentioned earlier on. And then finally, the audit committee, which Grant chairs, only meets a couple of times a year, and once substantively, and then another time to review the audit report from at the end of year audit that Mark Heaton and KM Accountants deliver. And they oversee both the internal and external audit processes, as well as receiving reports around things like money laundering, controls, whistleblowing, and these kinds of issues. So across those 3 committees, they kind of get into some of the detail around those 3 areas that the full board doesn't have the time to get into in full board meetings, which have focused more heavily on strategic questions of the direction of the credit union and so on. Any questions coming in there, Jackie? Or?
Just check for you, Matt. No, nothing related to the report.
Okay, well, assume then that there aren't any questions at this time. There is time at the end of the meeting, though, when we get to any other business, if anything occurs to people in the interim, then we can cover it at the end if you want to. Okay, so now we're moving on to the motions. So we've got 2 motions to vote on today. They're both rule change motions, so they require 2/3 majority to pass. You should have had the information along with the invite to come today, so hopefully you've had a chance to kind of consider that, what we're proposing. And I'll briefly summarise before we move to a vote. So the first one is around the objects of the credit union. And what we're doing here is introducing a 5th object alongside the 4 that already exist in the rules, which is a necessary requirement if we were to use the new powers that the legislation I mentioned a couple of times already that was passed in 2023 allows credit unions in principle to do. And those are primarily about secured asset lending finance arrangements like hire purchase or conditional sale loans for cars, probably most obviously. And then secondly, insurance mediation. So there's an opportunity if we wish to partner with insurers and introduce our members to those insurers for general insurance products, travel insurance, that kind of thing, and we might receive a small commission for anything that is sold as a result of that introduction. And now, if we were to enter into either of these activities, we would have to obtain further permissions from the FCA that we don't currently have. But before we could even apply for those permissions, we need this object to be in our rule book. And so really the idea with this motion is to provide the basis for us to have that option. It doesn't necessarily mean that we'll do either or both of those things that I mentioned. And if we did, we'd need to get regulatory approval in any case. But it gives us the option, should we wish to in time. So that's why we're asking you to support this motion. If there are any questions, happy to take them. Otherwise, we could move to the vote.
There's just one question coming in, Matt. Is the credit union at present minded to offer additional services?
Yeah, I think so. I think it's subject to certain caveats in terms of, for the insurance point, for instance, I think we'd want to ensure that whatever we were offering, the partners we were working with, were offering a quality service that was likely to be, meeting the needs of our members as well. So good price and good level of cover and so on. But subject to that, I think it would be under insurance is a big problem, especially amongst low income households. Quite often people go without insurance, and that can leave them exposed to risks. So I think there's a potential for us there. Again, with secured lending, I think it's an opportunity potentially for us to grow, and it'd have to be the right opportunity and with all the caveats around, risk and so on. But in principle, it's something we want to explore.
Great, thanks, Matt. So yes, the 85% of members have voted, and it is majority yes.
Okay, great, thank you. So then I'll move on to the next slide, if I can do it. Okay, there we go. So this one's about corporate membership and the common bond, and I think there was a question earlier that referred to this, so I'll address that now. So we expanded the common bond in 2023, as I'd alluded to earlier, to the four sectors: retail, co-op, housing, and charity. So anyone employed by businesses in those four sectors is eligible to join us. And the idea with that was to give us options in terms of creating new relationships with organisations in those four sectors without needing to kind of add by name each of those employers as and when we made a relationship with them. So it kind of is another future-proofing kind of solution. But what we didn't do was amend the corporate membership element of the common bond alongside that, which is probably a gap in the thinking at the time, which we hadn't identified. But the reason why this has become more relevant now is that we, through our membership of the Greater Manchester Consortium of Credit Unions, so all credit unions that serve and are based in Greater Manchester are invited to join this consortium, and it's really just a kind of way of cooperating and working together on initiatives across the city region, as well as engaging with the elected mayor Andy Burnham, and they have developed a scheme in partnership with an organisation called GMCVO, the Greater Manchester Council for Voluntary Organisations, and their social enterprise division, to lend to social enterprises in the city region, but with a 80% risk guarantee. So with a number of partners that they have worked with, funders, partners. So Esme Fairburn is one, the Access Foundation, which is a national sort of quasi-government social enterprise investor, is another, and the Greater Manchester Combined Authority is a third partner. Between the three, they've constructed an 80% risk guarantee for this social enterprise lending scheme. So you know, there's again similar to the last one. There's some water to flow under the bridge before we actually might sign up to participate in this program. But we have been encouraged to do so by GMCVO, who see the potential for our credit union to be in a position to kind of fill gaps where perhaps the local credit unions aren't able, due to maybe their size or their appetite, to lend to a particular social enterprise, for us to potentially fill gaps. And of course, a lot of these businesses and social enterprises will be co-op or charitable organisations, or potentially have a retail element too. So I think that, and maybe even housing too. So I think there's a relevance to our 4 sectors to this scheme as well, which they see as an opportunity. And so we want to broaden the common bond, align the corporate membership element with the wider common bond for that reason primarily, so that we have the opportunity to, or the option at least, to get involved in this scheme, which with the risk guarantees that are available is, you know, a pretty solid proposition for us in terms of you know, gaining some know-how and experience around lending to businesses without the worry that, you know, it could come back to bite us. And then potentially from there, who knows, it, you know, may become a more significant part of what we do, and this common bond expansion would support that. So that's what we're proposing here. Again, happy to take questions if there are any on that, or if not, we can move to a vote.
Yeah, there's no questions at the moment on that.
Okay, thank you.
.94% of members voted, and it's a majority yes.
Okay, great stuff. That's great. Thank you for your support, everyone. Okay, so couple of the last bits from me. So we've got the elections next. So typically we would ask Nisha Avat, as the chair of the Nominations and Reward Committee, to speak to this section of the agenda. But because Nisha is one of those that's on the list to be re-elected, felt like that probably wasn't appropriate. So I'm going to cover this section too. And we've got 7 of our 9 sitting directors up for re-election today. 2 of those, David and Robin, were proposing just for election for 2 years to complete their current term. The reason that that we're doing that in that way is because, due to an error of mine last year, we didn't put them up for election when they ought to have been, and so that was just a mistake on our part, and as a result we co-opted them for the year, and so we want to kind of formalise that by electing them today formally, but it's only for the 2-year period. And then with Grant, Lisa, Nisha, Samuel, Sam and Peter, they will be elected for 3 years in the usual way. Peter, Sam, Nisha and Lisa are all standing for their 2nd term, having been elected for the first time 3 years ago. Grant, I believe, is into his final 3-year term, along with David, and Robin's into his 2nd term, I think. So each of them has written a short statement, which was distributed with the meeting papers. So hopefully you've had a chance to read through those. You know, they're all established directors who've been contributing significantly to the credit union already for a number of years. So we hope you'll support their election today. I think because there's so many, we're going to have a number of we're going to have 7 individual votes now. So, yeah, get your fingers ready to vote, because there's going to be a few votes in quick succession. Well, thank you.
For David, we've got 88% of members voted and it's a majority yes.
Great, thank you.
Robin. And again, we've got 91% for Robin, and that's a majority yes as well. Launch for Grant. And we've got 94% members voted, and again, it's majority yes. Peter. Again, that's a majority yes, 88% of members voted. Lisa. Again, a majority yes for 88% of members voted. Nisha. That's agreed with 94% of members voted. The last one for Sam. That's a majority yes as well, with all the members voting.
Okay. Thank you very much, everyone. That's a bit of a voting marathon there. Well, thanks for your support. I'm sure I could speak for each of the directors there as well in thanking you. I'm certainly very grateful for having such a supportive and knowledgeable and skilled board. You know, it really does make a significant difference to me in my role and to the fortunes of the credit union that we have such a strong board. And so I'd like to take the opportunity to say thanks to all of those. the 7 on screen, and Justina and Andy as well, who were elected last year, for their support for me and the credit union over the course of the year. All of them are volunteers, of course, and give their time freely to support our organisation. Okay, so the last little bit from me, you'll be glad to know, is the lottery. So just to mention really that as part of the meeting papers, we published a sort of summary financial statement for our Friends of the Co-op Credit Union Lottery. This is run formally by a separate organisation, but it's a member benefit, and roughly half of all of the entries that are kind of paid into the lottery each month, a pound each. It's a pound each with a limit of 10 entries per member per month. Roughly half of that goes back to participants in the lottery in prizes. So we pay about £2,000 per month in prizes, and the remainder the lottery grants to the credit union to support our operating costs and our strategic goals as a business. And so yeah, we've published those statements for you for transparency. The lottery is registered with Manchester City Council. We're being based in Manchester. We're required to register a small lottery with the local authority, and we submit returns to them on a monthly basis regarding our draws and so on. And we have a committee with some independent members. It's Ken Jackson and Charles Sim, who formerly were stalwarts of the supervisory committee, who sit as independent members on our lottery committee. And yeah, it's something that gives a bit of a benefit to members, and we certainly get really positive feedback from the winners of the lottery every month, as well as supporting the credit union as well. So happy to take any questions if anyone's got them about the lottery itself or the financial statements we published.
I'll just check the questions. I don't think there's any more come through in that.
Okay. Someone's ringing my front doorbell. I don't know if you can hear that, but I'm gonna have to leave them out waiting outside, I think.
No, there's no more questions, Matt.
Okay. Cool. So I'm going to hand over now, I think, briefly to David, who's going to talk a bit about the Graham Southall Award.
Hi, thanks, Matt. Coming towards the end of the agenda, the Graham Southall Award. Graham was one of the founding fathers of the credit union, an absolute stalwart to the credit union through many, many years of service. When he retired, we introduced this award in his honour, and sadly, it is now also awarded in his memory. The way it was designed as a reward scheme was that it was to go to a volunteer, and recognising the contribution of the volunteers. Now, due to increasing professionalisation within the credit union, and we now have a larger staff team. With Matt's arrival, we have a CEO position. We rely less on volunteers. The only volunteers we now have are the board of directors. It seems inappropriate that we should start awarding ourselves with awards. So what we've decided is that this year we're going to pause and how we decide who this award is going to go to, and broaden it out from the volunteer base, perhaps into sort of a wider cooperator award. But we're going to spend a little bit of time thinking about that. So last year we gave the award jointly to two other stalwarts of the credit union, David Dickman and Chris Smith. Chris, another one of the founder members way back when, and so in effect, that was on their retirement last year on the board. But so in effect, these two heroes of the credit union have only had the award for 6 months each. So what we've decided, that while we have this little pause and we revisit how the award scheme, that we will allow them to share the award for another year. So that in effect gives them a whole year with the award each, rather than the 6 months that the joint award last year gave them. So thank you once again to David and Chris for everything they've done for this credit union, and the award is yours to share for another 12 months. Okay, thank you. And that just leads us on to any other business. So if you use your the chat box, if you want to raise a question or ask any of us anything else, give you a few moments to do that.
And there's just a comment there, rightly so, well done David and Chris on keeping the award. There's nothing else coming so far.
Was that David's printer kicking into action now?
Yeah, my printer's someone's pressed the print button somewhere else in the house. Okay, so in that case, if anyone has any other thoughts or feedback for us, you know where we are, and please get in touch. Thank you for your time today. Thank you for joining us. And another thank you to my board and the staff team, and really a huge thank you to the members who are on this in this meeting. The credit union is owned by our members. It's run by our members, and it's run for our members. So thank you all, and hopefully we'll see you next year. Thank you very much. Bye-bye.
Thanks, everyone.
Thanks, everybody. Enjoy your afternoon.
Bye.
Bye. Thank you.